software, it's not the ETFs, it's not the stocks, it's not the market, it's not anything. It's not even Barack Obama who's going to mess up this country, it's you. You're in control. You have the ability to handle this. So have a written system that you can follow. How do I get in? How do I get out? And set the stops. Have a journal. If you do not have a journal, start one. Start now. Here's the best way to start a journal. Go to Office Depot, spend $2.12, and buy you a spiral-bound notebook or buy you a journal notebook. Go to your current portfolio and start writing down why you own that stock. Then, right below it, write down what stupid thing you did along the way. Held it too long, didn't take the profit. You decide what you did. Then write down what you did right. Sold it, whatever. You decide. But start to look at what is your strategy. How are you building this thing? What are you doing to get where you want to go? If you can't get there, you're on the wrong track, folks. You're on the wrong track. And so this is all about discipline. 7 smart things investors do every day. 1, they manage the risk of their portfolio. How do I do this? Every morning I get up, I look at my portfolio, and I say, how much risk do I have in my portfolio relative to the market closing yesterday? Yesterday, the market closed down. We closed down 62% off of the bounce, off of the October 10th low, which tells me that a Fibonacci retracement of technical analysis that we either were going to bounce today or we were selling lower, which would take me to the October 10th low. So the risk of holding my portfolio today was 33% more risk to sell it than to hold it. In other words, I believe that we would bounce today based on my analysis. So I'm willing to hold my portfolio into the bounce. Did we bounce today? We started there. I don't know where we are now. We were up 120 when I came in here on the Dow. Are you seeing what I'm saying? I'm measuring the risk of my portfolio. Number 2, never take a big loss. Here is how you can color yourself stupid. If you own something in your portfolio that's down more than 25% and there's not a justifiable reason for it, hello. Earth, GE, Cisco, Intel. Don't make me keep going. I'm going to find one you own. Las Vegas Sands. Let's not even go there. Fannie Mae, Freddie Mac on the bounce. Citigroup on the bounce. Wachovia. Oh, they can't go out of business. Bank of America. Great acquisition, you morons, for buying Merrill Lynch. Thank you very much. I can pick on just about any stock today and we'll find out where we are. So never take a big loss. How do you avoid that? You have a stop. That's a discipline. Here's the thing that astounds me. Raise your hand if you use stops on every position you ever buy in your portfolio. Look around. There's less than 5 hands raised. How can you do that? How can you not hedge or protect your portfolio? How can you not do that? You know, you have got to learn to do that. And I'm going to tell you, that's how you take big losses. Invest according to a plan. You got to have a plan. Practice patience. Some of you can't trade for 10 minutes. You buy a stock, it goes down, and you start thinking about how to sell it. Why? What do? You're thinking you made a mistake. That's why you should put the trade in before the market opens, let it execute, and go play golf. And there's ways to do it. But what I'm saying to you is you have to know you. You are the supreme ruler of your portfolio. If you don't know you and you're trading off of what everybody else tells you to do, you're going to get hurt. You have to build your portfolio, not somebody else. Knowledge is power. Follow the rules is harder than learning them. How many of you know rules? How many of you know you should have a defined entry? You should have a defined target. You should have a stop. And if you don't have a stop, you should have a hedge. You know, as we go through this, how many of you know these rules? How many of you know the trend is your friend? How many of you know you should have a stop in the event that the market turns and falls over and goes belly up? You know these things, but what do you incessantly do? Ignore them. Why? How many of you have children? How many of your children listen to you? That's where you learned it. You thought if they could ignore it, you could too. Don't do this. How mad do you get at your children when they ignore you? You know, think about it. Trading is no different except who's in control of it. There's no one but you. You're the only person you could. The fact that this is an actual real this was a real play that was put on my website a while back. All right, it's gone. I lose things really easily. I had a pointer, and I really need it. It's stuck in the bottom of my pocket. All right. Does everybody see this right here? What is this? I can't. Let me help you. My daughters mumble. Please speak. It's a what? It's support, a channel, consolidation, trading range, any of those things. But what I want to do is say it's a yellow box. And the stock is trading in the yellow box, meaning that it's range bound on the top and the bottom. So it's range bound and it's in a channel. So as it's trading through this channel, technical analysis says that it will break either up or down. The previous trend is which way? Up. Statistically, in technical analysis, that says we have better than a 60% chance that it will break up because it's a continuation pattern. Do you understand? There's trend-breaking patterns and there's patterns that are continuation patterns. So we don't have time to get into all that, but this is a continuation pattern, and it's going to generally break to the upside. So if it were to break to the downside, I would not short it because statistically it's against odds that it will stay down. Those are just things that I know. And how do I know them? I know them from 27 years of trading. Now,